You got two competing worldviews here, Don.
Yep.
I'm going to let you break the tie. Steve Forbes, in my opinion, is very soberly assessing the tax and spend and regulatory impact on the stock market and small business and entrepreneurship. On the other hand, James Altucher makes a strong cyclical argument about the need for steel and other basic materials to resupply inventories and keep this big red machine going. So, Don Luskin, it falls to you to tell us who is right and who is wrong. This is an enormous burden.
No
Don, I'll pay you
problem.
afterwards.
No problem. They're both wrong.
Oh, okay.
What? Altucher is wrong because the inventories to sales ratios in all durables are still in excess. They are not thin, they are fat. There is still more inventory liquidation to go. But the more interesting topic is the political one. I happen to think we have a kind of win-win proposition in our hands because, you know what? If Obamacare passes, that'll be a small price to pay for what will surely happen in November, which is that the Republicans get the House of Representatives. So I'm actually in favor of Obamacare passing. I really want it to pass. Good luck, Nancy Pelosi. You're out of there after November if you do this.
Steve
Forbes,
that's
the best thing in the world for the stock market.
Steve Forbes, how did he play? Oil's now, you know, it's sort of like the silent rally. Oil's $83 a barrel, almost out of nowhere. The dollar seems to have peaked out, Don, and gold had a comeback. Gold's back up to 1120. The charts look pretty strong. It seems like since the nomination of Janet Yellen, a super dove for the Fed, and, of course, Bernanke's the FOMC yesterday, which I call militantly dovish. Is it time to go and buy these commodities?
Hey, it's time to buy more of them. Let's put it that way. Who's been saying all along to buy them? Look, the reality is that whether the case is only stronger with a super dove, Phillips Curver, output gap maven like Janet Yellen now in a permanent voting position. But we didn't even need her because Bernanke basically has all the same intellectual equipment. They believe that as long as the unemployment rate is high, that they should just print, and there will be no inflationary consequence because the high unemployment rate will actually absorb the inflationary impulses. So why not drop an infinite amount of money out of an infinite number of helicopters? That's their philosophy. Now, even as we get a cyclical recovery, we're going to get so many people coming back into the labor force that even while we get positive job numbers month after month after month, probably starting next month, that probably won't be enough to move the unemployment rate down because new people are going to be coming into the workforce and they're going to start out unemployed. And that's the number that Yellen and Bernanke are going to be looking at. It's going to be zero Fed funds rate as far as the eye can see. So that means gold higher, dollar lower, oil higher. Anything that benefits from liquidity is going to go up.